As always, guys, this is just for entertainment purposes only. This is not financial advice. Hey guys, and welcome back to my channel. I want to discuss a few bank stocks, one small cap, one mid cap, and one large cap. We will start with the small cap, Farmers National Bank. I think it's about 500 million in market cap. And what we saw is has been certain volatility of the share price. Most of it long term can be explained. We see here that it suffered. It actually had its IPO just before the dot-com bubble, probably suffered from that. It suffered from the banking crisis. It suffered from 2020, and it also is suffering from current market conditions. So what's their current pricing right now? Is the stock worth it? Should we be buying? Should we be selling? Should we be holding? So let's have a deep dive onto the stock and explain where it is, where it's going. So when evaluating stocks, you know that I look at a lot of pointers, but 3 pointers are very important to me. That's valuation, growth, and in current market, dividend for dividend protection. Very important to me. Now, when we look at valuations, high level, first thing we see, price to earnings ratio, 9.6. I mean, that's pretty good. That's pretty normal for a bank, but it's also pretty good. I look at their margins. This is something I really like. They have a margin of 36%. So that is really nice. Debt equity ratio only 22%. That's low. From a high level, we're looking pretty good here. And then dividend yield 4.3% and a payout ratio of 30%. I mean, that's good by any standards. When we look at their history and trying to explain where is the current low price coming from, I mean, this is a good valuation just based on those high level numbers. And then when I look at their latest earnings, what do I see? I see acquisitions. So they have a history of acquiring farmers banks. So ever since 2007, they've been acquiring. Look at all of this. I mean, this is pretty great. They're doing really well here. And their latest acquisition, I did look into the financials of this bank. So we're having Umpqua Financial Corp. Something I'm concerned about this one is that they acquired their last acquisition in a time that the market was a little bit overhyped. So in 2022, they probably agreed the price earlier this year. But look in their growth numbers, and I think that's also currently why the price might be so low. It's difficult to value a company after the acquisition. When you look at the net income, that's the first line here. We see it's currently at 55 million a year, and we're going to 83 million. So that's a really nice growth rate. They also expect to increase their dividend. We're going to see a 50% increase per dividend. So these are two things that I really love: an increasing dividend and increasing growth. I do want to look at one detail here, and that is common shares outstanding. So when I look at that here, so this number, when I look at that, ouch, they've been increasing their shares to do the acquisition for the last 3 years. That means your stock is worth a little bit less. They did it already a few years in a row, so they might be keep at it. I mean, yeah, that's something that is a red flag to me. It's not yet extreme, although this year it was pretty extreme, more than 10%. Yeah, they are still small caps. They want to grow. Compared to the growth of their earnings, it's not too bad, but that's something you want to pay attention to if you're interested into this bank. Second bank, Umpqua Holdings Corporations, we actually see quite a similar trend as our National Farmers Bank. So we see it went up during the dot-com bubble. We see it went up during just before 2008 crash, and it had two low points in 2009 and 2020. Does that mean we're now in an overvalued zone, or we should wait until it's back at these 2008, 2020 lows? No, that doesn't mean anything. I think the most important thing is that we are able to buy them at currently very good valuations. And year to date, it has already dropped 10%. Unfortunately, here it just went up 7%, so I'm not the only one who noticed this stock. But should that keep you from buying just because it has 7% drop? That doesn't mean it will do another. That doesn't mean it will do another 7% jump tomorrow, or it will drop 7%. So it's very hard to predict. The only thing you should look at is the current valuation of today, and not try to predict what the stock price is going to do in the short term. So let's dig into the details, something that I like to like to look at. P ratio, we can see it's very comparable with Farmers Bank. We also see good margins, so comparable margins. Debt is a little bit higher, but nothing to be concerned about. And what we also see is a really nice yield. I mean, 4.9, payout ratio of 34%. Again, it's a little bit comparable with the Farmers Bank, but I think this one is slightly better. And one thing that I'm also really liking in this one, let's go a little bit down. Here, insider buying. I love to see insider buying in a stock. I mean, if insiders are buying, yeah, I mean, you're selling for a lot of reasons. You're only buying for one reason. And looking into the financials a little bit deeper, what we are seeing is that they are expecting a huge earnings boost the coming 2 years, maybe related to the increased rates of the Fed. So that's one of the reasons why I'm currently looking into bank stocks so much. They are going to benefit the coming years a lot from higher inflation. We see revenue and earnings almost double, and this could lead to a doubling in dividend as well, or at least a 50% increase. So if you buy at current price, you could be looking at a 7-8% dividend in 2 years. I think that Umpqua Holdings has currently not yet priced in the future higher rates. So I do think that you could be doing a good buy if you're buying it today. By the way, they are not diluting shareholders. They are actually buying back shares as well on top of the dividend. So these are really things that I like to see. And then the last one is Citigroup. I think Citigroup is interesting because Warren Buffett bought it, and yeah, I know he has his reasons. So let's try to figure out why he bought them. Citigroup is a little bit of a different story. Unlike the other stocks that crashed in 2008, Citigroup never really recovered, and it's now still at a very low. I mean, compared to its birds in 1986, it actually has a similar price. So over 30 years, you almost made no profit on it, and you strongly underperformed the SP 500. But maybe in the current market conditions, a stock like Citigroup is just the right thing you want to buy. So from a high level, what are we seeing? The PE 5.4. So that is a lot better than the small cap and the mid cap stocks that we saw. They are making profit now. They are not dependent of future earnings. So that's something really good. Net profit margin, yeah, a bit worse, 23.6. That's probably related to their high debt, 280%. Dividends, 4.3 at a payout ratio of 24%. This is actually the best one of the three, but there is a trade-off if you're buying the current earnings. Namely, when we do look into the details, we see here in 2020, that's not very visible. Let me change that. So in 2020, you have current earnings of 13 million. And actually, when you look at 2024, 14 million, almost the same. Some analysts are predicting it's going to increase by that. And that's probably why Warren Buffett might have, that's something he might have spotted, that Citigroup is turning things around. But yeah, 2026 is a long time in the future for a stock to be under pressure. And that's even in 4 years, it's quite a low growth rate compared to the other two banks that we saw. Also, revenue growth really slow from 73 million to 79 million. Of course, as a big investor firm, they usually have a preference for those big, huge stocks. So, I mean, it's a stock that's currently making money. If you want to just, if you just want to get, I don't know what Warren Buffett paid for the price. So he might have gotten a cheaper deal because just him buying it will probably have given the stock a boost. But in any case, I will probably prefer Umpqua Bank of these three. I actually, while I'm writing this, when we are scrolling up, you can see that I have a buy order outstanding for Umpqua Holdings. So I will be buying this stock today at the market opening. Even though it risen 7% on Friday, that's something I really don't like to see, because that means it's probably going to drop, but I'm going to check a little bit what's doing pre-market. But yeah, generally I'm very poorly at timing the market, so I'm just going to buy it, and if it drops, that's not so bad, because it means I can buy more next week or next month at discount prices. Guys, thank you so much for watching. If you like this video, please like, please subscribe. See you next time.